Hey Internet, it's RJ. Welcome back. Thanks for tuning into the show today. Now today is Sunday, so you know what that means. We're going around the net with all the news you can use in the week that was in credit and finance. And we've got 3 decent stories for you today. So we're starting off with the CFPB and medical debt finally stepping in and passing a rule about that showing up on credit reports. We have one of the more disappointing re-entries into the credit card space finally or potentially coming to an end, and that is from Ally Bank. And of course, we have US Bank and Smartly in the news once again. This time they are making things right. We talked about them last week, finally getting everything right. If your product changed to the Smartly card, well, now they're going to go back and make sure we've got all the points we're owed. So, of course, if any of that sounds interesting to you, go ahead, press the subscribe button, and let's get to work. Now, we will bat lead off, which is probably the news of the week, which came from the CFPB, Consumer Financial Protection Bureau. They finally weighed in on, consumer medical debt being reported on credit reports and lenders being able to factor that into lending decisions. So, one thing about it, I do like their press releases. They're at least thorough, if not anything else. So let's take a look at this and what their overall decision was. Now, of course, we've got the whole thing for you on ProfitfulContent.com if you care. But the highlights here. So today, the Consumer Financial Protection Bureau finalized the rule that will remove an estimated $49 billion in medical bills from the credit reports of about 15 million Americans. The CFPB's action will ban the inclusion of medical bills on credit reports used by lenders and prohibit lenders from using medical information in their lending decisions. They go on to say the rule will increase privacy protections and prevent debt collectors from using the credit reporting system to, of course, people to pay the bills they don't owe. That does make sense. CFPB has found that medical debts provide little predictive value to lenders about borrowers' ability to repay other debts, and consumers frequently report receiving inaccurate bills or being asked to pay bills that should have been covered by insurance or financial assistance programs. Then they go on to say specifically 2 points. Prohibits lenders from considering medical information. The rule ends the special regulatory carve-out that previously allowed creditors to use certain medical information in making lending decisions. This means lenders will also be barred from using information about medical devices such as prosthetic limbs that could be used to require that devices serve as collateral for a loan for the purposes of repossession. That's crazy. Bans medical bills on credit reports. The rule bans consumer reporting agencies from including medical debt information on credit reports and credit scores sent to lenders. This will help end the practice of using credit reporting system to coerce payments. As they said above, lenders will continue to be able to consider medical information to verify medical-based forbearances, verify medical expenses that a consumer needs a loan to pay on, consider certain benefits as income when underwriting and other legitimate uses. So there you go. The funniest part about that, well, funny might be the wrong word depending on where you're at here, but part of this basically says, you know what, like hospitals and insurance companies, you get it wrong so much, and we can't really step in and make you get it right for whatever reason, so we're just gonna not count part of it, because oftentimes we find that it's wrong or inaccurate or things are under dispute with insurance. And I did spend a few years in healthcare before I became an evil banker, and that kind of tracks. You'd be surprised, or maybe you wouldn't be surprised, the amount of billing issues and errors that come up. So overall, I don't know if people are going to see a massive change. I believe lenders have been waiting this less and less for quite some time now. So more so, I think it's fine that, hey, it's finally official and you don't have to worry about it. The part where a lender would want to use your prosthetic arm as collateral is crazy. But there you go. I think that's overall pretty good. Seems like a better use of consumer CFPB resources than the overdraft fees that we saw a while back that they were on, but they did pass that as well. So overall, good work there. On to the next one, which is Ally Bank. Now, Ally, we talked about, they're one of my favorite banks. Despite never paying me anything or giving me any referral offers. A while back, maybe 2 years ago, Ally had gotten back or was going to get back into the credit card space. They purchased the Allo portfolio of credit cards, and people were interested, one, because it's Ally getting back into the card market, and number two, because Allo, which was not really widely known, we have a video on them, of course, because we cover credit cards all over the place, but they had a card that was 3% back on everything. And at the time, that was before the Robinhood Gold card. That was before our next story, the US Bank and the Smartly cards. That was crazy, but it really wasn't that known about. And I think it was kind of an invite-only type deal. It wasn't necessarily a special card. But anyways, Ally being one of the major banks by name actually paying out decent interest rates on high yield accounts. They're not by far, they're not the highest, but for mainstream, they're pretty high. There was high hopes that, hey, they getting back in the credit card space, this could be good. And nothing ever really came of it. And now it looks like they may be exiting, or as they say, strategic partnering their way out of it. So specifically, this was the article, and granted, it is just like a comment here, but this is from Banking Drive, and Ally was primarily being asked about their exit from the mortgage space, which they are getting out of the mortgage business altogether, from what you can tell, cutting mortgage operations. But the quote you care about, is the Ally top boss. He's also indicated in December that credit card business wasn't a core focus for the bank. In an email to Banking Drive, Gilchrist said Ally was exploring strategic alternatives for its credit card business in the first quarter. Well, we're in the first quarter, so they're looking to get out of it, apparently. When you say the word strategic partnership, to me that kind of sounds like Elan Financial. And like they'd lean towards just like, hey, we want to have credit cards, but we don't really want to be bothered and run it. So, Elan would come to mind as a strategic partner. Not so much Cardless, because Cardless is more so we make co-branded cards, but I suppose they could also throw their name in the hat maybe, but those would be like the two companies. When you say strategic partnership, I don't know what else you would really do, or is it just, hey, we're going to sell the portfolio, because they got it from Allo, but they really never launched their own credit cards, launch, right? Like they're on the website, on the toolbar, you can see them, there's 3 of them, but you have to have a mailer to get them, like an invite. I know some people who got those and even got like $200 intro offers. But again, as much as I talk about Ally, they never sent me anything. Now, this is definitely just like a passing comment when the overarching point of the interview was like mortgage operations. But again, the guy said, hey, they're not really a focus. So I don't know if it's a, hey, we tried and just wasn't for us or whatnot. I mean, the cards were never really anything to write home about. So granted, it's kind of on us. We're like, hey, this could be cool, and it just turned out to not be anything. So it seems like they might be exiting the credit card space, which is kind of a bummer. Like I said, I had high hopes for them, but oh well. So I guess if you got an Ally card, good for you, or let me know what you want to see with them. But whatever comes of this, I don't think it's going to be of interest to the most of us, unfortunately. So what is of interest, at least to me, and has been for like the last few months, is US Bank and the Smartly program. Now, last week, it wasn't really news last week, but I threw it in at the end of the show as a Smartly card holder and someone who moved $100,000 over to US Bank for this. I was happy to report that my Smartly card had shown up now finally in the beginning of January, that it was now giving me 4% back. Is where previously I had product changed to Cash Plus to this, as you know, and it had said 2%, and I was probably like 2 or 3 months, it just kept saying 2%, 2%, and it should have been ticking up, because it's based on like a 3-month average, I believe, so it should have, and they were also, if you'd open a brand new account, they weren't going to make you wait 3 months, at least from the terms of those new accounts. So if I did open new accounts, IRA being the main one, it should have at least ticked up to 2.5% or 3%. And I talked to some folks and they said, yeah, it's going to take till January. So now, US Bank sent out a memo, and I will show it to you. To my surprise, dear me, thank you for opening your new US Bank Smartly Visa Signature Card. We truly value your business. Well, I appreciate that. We want to make you aware of a technical issue impacting rewards points for some customers who upgraded to Smartly Visa from a previous US Bank credit card. That would be me. Some customers may only be earning 2% cap back. That would be me on all purchases instead of the 2.5, 3, or 4 total cash back you should be getting earned based on your total US Bank balances. Rest assured that we will fix it. It'll take 1 to 2 billing cycles, but they will fix it. So there you go. I mean, I thought that was a nice touch. I don't know if they just didn't, they had clearly planned for product changing, because again, the guy I talked to who turned out to be correct when everyone was being mean to me on the internet saying I was wrong, they weren't that mean, but that you could in fact product change. We just tried to do it early, and then the bank was like, no, call back on Wednesday that week, and sure enough, it worked. So they had clearly accounted for product changes. Perhaps they didn't account for how many product changes they were going to get. Don't really know there. So I guess the point is, hey, they're going to make it right. Now, for me, it's not going to make it that big of a deal, because I was using the card a little bit, more so to get it warmed up, which is a weird way to describe it, but Having only ever used that Cash Plus on 2 specific transactions, I noticed I'd start to use it, and after a certain dollar amount, like a few $100s, it would get denied. So I'd use it here and there, but I had still stuck with my Bank of America card for a while until this actually changed in the beginning of the month. So I do know there are some people who already had 100,000 with them, and they made the change. So those people probably definitely owed something. I also found out through another friend of the channel who smartly is now, according to the U.S. Bank person they talked to, just a rep that like Smartly's I consider like their top card. Of course, with the altitude reserve being gone, and so they weren't letting you product change from Smartly to additional cards just yet. He had like product change from one card he already had there, and then wanted to switch back or something. So anyhow, that is interesting to know that's how they're perceiving it internally, which does make sense because why would I let you move away from a card? There's a potential to convince you to bring in much more money to the bank. So as a Smartly customer, I'm happy to see that. I don't really know I think there's a lot of interest out there in this because, again, you can still get, I go for the 4, but you can still get a lot of value with the 2.5. So that's why I keep including these stories in there. But overall, that is the news. So good news all around. So of course, if you liked it, drop me a thumbs up down below. If you found it particularly interesting, consider subscribing to the channel. So we're posting content just like this every single week. And of course, right back every Sunday with all the news you can use in the week that was in credit and finance. And of course, every single day over on Profitable.com, which is the channel's blog, no less, where we have the latest news stories just like this. We have plenty of bank promotions, including some from US Bank if you want to get started on your journey to Smartly. Nothing from Ally yet, but on occasion they send us referrals, just not me, of course. And of course, we have credit card offers. Oddly enough, nothing from US Bank, but we do have the blue chips over there as well, who at least we know pay you out what they're supposed to when they're supposed to. So there's that. All of that and more for your profitable earning needs. Anyways, guys, that'll do it for this one. As always, thank you so much for watching. I'll talk to you very soon in the next one.